Welcome to our deep dive into recent stock market trends. In this video, we'll explore the latest movements and technical signals from a range of stocks, including bullish breakouts, bearish collapses, and extreme volatility. We'll break down what's driving these moves, examine key technical indicators, and discuss what investors should watch for in the coming days. Whether you're a seasoned trader or just starting out, understanding these patterns can help you make more informed decisions. Let's begin by looking at the general market environment and why technical analysis is so crucial in today's fast-moving markets. RGTI has been on a remarkable run over the past 3 months, surging from around 11 to over 31 by late September. The most dramatic gains came in September, with the price nearly doubling in just a couple of weeks. This kind of sustained upward momentum is rare and signals strong investor confidence. The stock has consistently set higher highs and higher lows, a classic hallmark of a bullish trend. Such moves often attract both momentum traders and long-term investors looking for breakout opportunities. But what's fueling this rally and how sustainable is it? Let's dig deeper. Trading volume is a key indicator of investor interest, and for RGTI, the volume has been anything but ordinary. Several major spikes in volume coincided with sharp price increases, especially in July and September. For example, on September 24, over 140 million shares traded hands as the price hit its peak. This pattern of rising volume during price advances and lower volume during consolidations suggests strong accumulation. When volume supports price moves, it often signals that the trend could continue, as more investors pile in to ride the momentum. Moving averages are a staple of technical analysis, and RGTIs are all pointing in the same direction, up. The stock is trading well above its short, medium, and long-term moving averages, with shorter-term averages leading the way. This alignment is a textbook bullish signal, confirming the strength of the uptrend. The gap between the current price and the longer-term averages highlights just how quickly the stock has accelerated. When all moving averages are stacked in this way, it often means the trend has strong momentum behind it. Look at RGTI's technical indicators reveals a market that's both strong and potentially overheated. The MACD, RSI, Williams %R, and Money Flow Index all point to powerful bullish momentum, but also show the stock is in overbought territory. The RSI, for example, is above 88, a level that often precedes a short-term pullback. The ADX and Arun indicators confirm the strength of the trend, while the Bollinger Bands show the price hugging the upper band, signaling high volatility. While the trend is strong, caution is warranted as overbought conditions can lead to profit-taking. Linear regression analysis for RGTI shows a positive slope, confirming the upward trend. However, the current price is well above the regression line with a deviation of nearly 48%. This suggests the stock is trading at a premium to its historical trend, which can sometimes precede a correction. Still, the overall correlation between time and price is moderate, meaning other factors are also at play. Investors should be aware that such deviations can lead to increased volatility as the price eventually reverts closer to the trend line. Looking ahead, RGTI's strong momentum suggests it could open higher on the next trading day, possibly in the 31.8 to 32 range. However, with technical indicators flashing overbought signals, there's a chance of some early profit-taking before any further advance. This is a classic scenario in strong uptrends. Momentum remains, but short-term corrections can occur as traders lock in gains. Watching the opening price action will be key to gauging whether the rally has more room to run. RGTI is approaching a key resistance level at 32.4, with immediate support at 29.71. If the stock breaks above resistance, the next target could be 35, a psychological milestone. On the downside, a drop below support might see the stock test lower levels around 28.84 or 26.21. The current price is closer to resistance, suggesting bulls are in control, but the narrow gap means any reversal could quickly test support. Monitoring these levels can help traders manage risk and spot breakout or breakdown opportunities. With an ATR of 2.25, RGTI is experiencing high intraday volatility. This means daily price swings can be significant, with potential highs near 33.89 and lows around 29.39. Such volatility can present both opportunities and risks for active traders. In strong uptrends, volatility often skews to the upside, but sharp pullbacks can also occur. Traders should be prepared for wide price ranges and use appropriate risk management strategies to navigate these swings. Most likely scenario for RGTI is a continuation of the uptrend, potentially breaking through resistance and heading toward 35. However, overbought conditions could trigger a short-term pullback or sideways consolidation. In less likely cases, a deeper correction could occur if profit-taking intensifies. The key is to watch how the stock reacts at resistance and support levels. These will provide clues about the next major move. Summary: RGTI is in a powerful bullish trend, with technicals and volume supporting further gains. However, overbought signals suggest caution as short-term corrections are possible. For long-term investors, any pullbacks could offer attractive entry points, while traders should stay alert for signs of reversal. The stock's exceptional performance highlights the importance of monitoring both momentum and risk in fast-moving markets. Turning to Snap, the story is quite different. Over the past 3 months, Snap has experienced significant volatility, with the price moving from 8.72 down to 8.22. After a sharp drop in August, the stock attempted a recovery in September but remains below its early July levels. The overall trend is sideways with a bearish bias as the stock struggles to regain lost ground. This kind of price action often signals uncertainty and a lack of strong investor conviction. SNAP's trading volume has been highly variable, with major spikes during key price moves. Heavy selling in early August was followed by increased buying interest during the September recovery. However, as the price declined from the late September high, volume also dropped, suggesting weakening selling pressure. This pattern can sometimes precede a stabilization phase, but the lack of sustained accumulation means the stock could remain range-bound for now. SNAP is currently trading below its short-term moving averages, indicating weakness. However, it's above some medium-term averages, suggesting a possible stabilization. The long-term averages remain above the current price, confirming the bearish trend. This mixed picture reflects the stock's struggle to establish a clear direction, with short-term weakness offset by some medium-term support. Technical indicators for SNAP are sending mixed signals. The MACD is slightly bullish, while the RSI and Williams % are in neutral territory. The money flow index shows moderate buying pressure, and the stochastic indicators suggest some medium-term bullish momentum. However, the ADX and Arun indicators point to only a moderate trend. Overall, the technicals suggest a period of consolidation or sideways movement, with no clear breakout in sight. Linear regression analysis for SNAP shows a slight downward slope, indicating a mild bearish trend over the period. The current price is above the regression line, suggesting some recent strength, but the overall correlation is moderate. This means that while the stock has recovered from its lows, it hasn't established a strong upward trajectory. Investors should be cautious, as the stock could easily revert to the mean if buying interest fades. For the next trading day, SNAP is likely to open flat to slightly higher, possibly in the 8.25 to 8.3 range. The recent stabilization after a pullback suggests some support, but the lack of strong momentum means any gains could be limited. If buying interest picks up, the stock might test the 8.5 level, but a lack of follow-through could see it drift lower again. SNAP faces immediate resistance at 8.51, with further resistance at 8.86 and 9.28. Support is close by at 8.12, with additional levels at 7.99 and 7.74. Stock is currently in the middle of its recent trading range, so a breakout above resistance or a breakdown below support could set the tone for the next move. Monitoring these levels is crucial for traders looking to capitalize on short-term swings. With an ATR of 0.4, SNAP is experiencing moderate volatility. This means daily price swings are likely to be contained, with potential highs near 8.62 and lows around 7.82. Traders should expect choppy action, with the stock possibly trading between 8 and 8.5 as it consolidates recent gains and losses. Most likely scenario for SNAP is continued consolidation, with the stock trading between 8 and 8.5. A breakout above resistance could signal a trend reversal, but this would require strong buying volume. Conversely, a breakdown below support could lead to a retest of recent lows. For now, the stock appears to be at a crossroads, with the next few sessions likely to determine its direction. In conclusion, SNAP is in a recovery phase after a sharp decline, but technical signals remain mixed. The stock is consolidating with no clear trend emerging yet. Investors should watch for a breakout above resistance or a breakdown below support as signals for the next move. Until then, patience and caution are advised. YAAS story is a cautionary tale of extreme volatility and risk. After trading in a stable range for most of the summer, the stock suffered a catastrophic collapse in late September, plunging from 0.79 to just 0.11 in a single day, an 86% drop. Such dramatic moves are often triggered by fundamental problems or negative news, leading to panic selling and a complete loss of investor confidence. The trend has turned decisively bearish, and the stock is now in crisis mode. Trading volume in YAAS was low and stable until the crash, when it exploded to over 150 million shares. This kind of volume spike during a price collapse is a classic sign of panic selling, as investors rush to exit their positions. Such events can create short-term oversold conditions, but they also signal deep underlying issues that may take time to resolve. After the crash, YAAS is trading far below all its moving averages, with the 5-day, 10-day, and even 200-day averages well above the current price. This wide gap highlights the severity of the decline and suggests the stock is deeply oversold in the short term. However, such extreme moves often require time to stabilize before any meaningful recovery can occur. Technical indicators for YAAS are deeply bearish. The MACD, RSI, Williams %R, and money flow index all point to extreme oversold conditions. The CCI is at a record low, and the Bollinger Bands show the price trading well below the lower band. While such readings can sometimes precede a technical bounce, the overall trend remains negative and caution is warranted. Linear regression for YAAS shows a nearly flat trend over the period, but this doesn't capture the recent crash. The current price is far below the regression line, with a deviation of over 85%. This highlights just how extreme the recent move has been and underscores the risks of trading in such volatile environments. In the extreme oversold conditions, YAAS could see a technical bounce on the next trading day, possibly opening around 0.12 to 0.15. However, the fundamental issues that triggered the crash are likely to persist, so any recovery may be short-lived. Bargain hunters may step in, but further selling pressure can't be ruled out. YAAS's immediate resistance is at 0.2, with further levels at 0.4 and 0.6. Support is difficult to identify due to the extreme drop, but the current price may act as a psychological floor. The distance to resistance is vast, highlighting the scale of the decline and the challenge of any sustained recovery. With an ATR of 0.1, YAAS is experiencing extreme volatility. Intraday swings could see highs near 0.21 and lows as low as 0.01. Such wide ranges make trading risky, and only those with high risk tolerance should consider participating until the situation stabilizes. Most likely scenario for WAAS is continued volatility, with the potential for a technical bounce followed by further declines if fundamental issues persist. Stabilization is possible if negative news is fully priced in, but the risk of further downside remains high. Investors should exercise extreme caution and prioritize risk management. WAAS catastrophic collapse is a stark reminder of the risks in volatile stocks. While technical bounces are possible, the overall trend is bearish and investor confidence is shaken. Until there's clarity on the underlying issues, caution is essential. This case underscores the importance of diversification and risk management in any investment strategy. INTC has staged a strong recovery over the past 3 months, rising from 22.69 to 31.22. After a sharp drop in late July, the stock rebounded powerfully in September, gaining nearly 38%. The trend is bullish, with higher highs and higher lows forming recently. This kind of price action often signals renewed investor optimism and positive developments in the company or its sector. INTC's trading volume has mirrored its price moves, with spikes during both sell-offs and rallies. The highest volume came during a major upward move in September, supporting the bullish trend. Higher volume on up days and lower volume on down days is a healthy sign, indicating that buyers are in control. INTC is trading above most of its moving averages, with short-term averages leading the way. This alignment confirms the bullish momentum and suggests the uptrend could continue. The gap between the current price and longer-term averages highlights the strength of the recent rally. Technical indicators for INTC are bullish but approaching overbought territory. The MACD, RSI, and stochastic indicators all point to strong momentum, while the ADX and ARUN confirm the trend's strength. However, the high RSI suggests a short-term pullback could occur as traders take profits. Linear regression for INTC shows a positive slope, confirming the uptrend. The current price is above the regression line, indicating the stock is trading at a premium to its historical trend. This can sometimes lead to a period of consolidation as the price reverts closer to the mean. INTC's strong momentum suggests a higher open on the next trading day, likely in the 31.5 to 31.8 range. However, with technicals nearing overbought levels, some profit-taking could occur before the next leg higher. Watching the opening action will be important for clues about the trend's sustainability. INTC faces immediate resistance at 31.7 with further levels at 33. Support is at 29.23 and lower at 28.81 and 26.21. The stock is closer to resistance, so a breakout could trigger further gains while a pullback might test support. These levels are key for managing risk and spotting trading opportunities. With an ATR of 1.43, INTC is experiencing high volatility. Intraday highs could reach 32.65, with lows around 29.79. Traders should be prepared for wide price swings and use stop losses or other risk controls to manage exposure. The most likely scenario for INTC is a continuation of the uptrend with a possible breakout above resistance. However, a short-term pullback or sideways consolidation could occur if profit-taking intensifies. Watching key levels will help traders adapt to changing conditions. In summary, INTC is in a strong bullish trend with technicals and volume supporting further gains. Overbought signals suggest caution, but the overall outlook remains positive. Pullbacks could offer buying opportunities for long-term investors, while traders should stay alert for signs of reversal. LUG has experienced a volatile but generally upward trend, doubling in price over the past 3 months. After some ups and downs, the stock surged in September, supported by strong volume and bullish technicals. The hydrogen fuel cell sector is gaining traction, and LUG appears well-positioned to benefit from this trend. LUG's technical indicators are bullish but approaching overbought territory. The stock is trading above all major moving averages and volume patterns support the uptrend. However, with the RSI and other oscillators nearing extreme levels, a short-term pullback or consolidation could occur before the next move higher. LUG faces resistance at 2.61 and support at 2.34. The stock is likely to consolidate between 2.3 and 2.5, but a breakout above resistance could trigger a move toward 2.8. A deeper correction is less likely but possible if profit-taking intensifies. The overall trend remains bullish, with the sector's positive outlook providing additional support. To wrap up, LUG is in a strong uptrend with technicals and sector momentum supporting further gains. Investors should be mindful of overbought signals and use pullbacks as potential entry points. The hydrogen fuel cell industry's growth could provide a long-term tailwind for the stock.